Senate Committee on Banking, Housing, and Urban Affairs will come to order. Today's hearing is a hybrid format, as many of our hearings are. Mr. Waller, Mr. Peter, and Mr. Griffith are here in person sitting here. Thank you for joining us. Mr. Melinda and Ms. Martin are appearing virtually. Members have the option to appear either in person or virtually. Those witnesses joining remotely, once you start speaking, there'll be a slight delay. To minimize background noise, please click the mute button when you're not speaking until it's your turn to speak. And you should all have a box on your screens labeled clock that will show how much time is remaining. Please try to respect those times as we ask our senators on the dais to do the same. You'll have, for those of you joining virtually, you'll have a bell ring when you have 30 seconds remaining. If there's a technology issue, we'll move to the next witness or senator or whatever we need to do until it's resolved. Whenever there's a problem in the economy that's hurting families and driving up prices, there's a pretty good chance you'll find a Wall Street scheme either causing it or taking advantage of it and making it worse. One of the reasons housing prices have gotten so out of control is that corporate America sensed an opportunity. Private equity firms, corporate landlords, investors saw a shortage. They saw a captive market. They bought up properties. They raised rents. They cut services. They priced out family home buyers. They forced all too often renters out of their homes. Our failure to invest in new affordable housing has left these renters with few options. Before the pandemic, nearly 1 in 4 renters was paying more than half their income for housing. That was before the pandemic. One thing happens in their lives, one thing goes wrong, and they face immediate eviction almost in many cases. Across the country, we see headlines about the skyrocketing cost of housing, the squeeze it's putting on our families, potential home buyers looking for a home in the communities where they grew up or where they work or outbid by out-of-town, all-cash buyers. Rents in communities from Atlanta to Boise to Cleveland to Denver are growing far out of reach for families and workers. While most of us see high rents and a lack of housing choices as a problem to solve, deep-pocketed investors see them as an opportunity for profit. Investment firms have been touting rising rents and renters' lack of options to attract investors. One large landlord proudly advertises under their, quote, market strategy that, quote, the recent mortgage meltdown has raised the bar for those who can qualify for a mortgage, then and therefore thereby increasing the pool of people who must rent for the foreseeable future. Unquote. But rather than providing the essential affordable housing that families need, many of these firms are just exploiting people. Tuesday, our committee held a listening session to hear directly from renters about what happens when investors put profits over people's lives. One renter was told when she asked why her rent suddenly increased by hundreds of dollars, quote, "We have to please the investors." Think about that. We have to please the investors. Renters in apartment buildings, single-family homes, manufactured housing from Las Vegas to Great Falls to Hyattsville shared their stories over and over. No matter where they lived, no matter what type of home they had, renters told us how they were overlooked and overcharged by the big investors that owned their homes. Longtime residents described double-digit rent increases and new fees for everything from water and trash to family pets. One resident of a manufactured home community in Senator Tester's home state said the increases amounted, quote, to about an 86% increase in the dirt our homes sit on. She was in manufactured housing. Seniors on fixed incomes and working families can't afford that. Renters in Maryland and Nevada and Texas and California had their homes, they told us, repeatedly flooded with wastewater, lived with pests and rodents, went long periods without hot water, without working showers. Senator Smith's home state of Minnesota, working mothers' repeated complaints about her home's flooded basement and dangerous garage went unanswered. The city itself was forced to step in because of code violations. Another renter in Senator Van Hollen's state told us that the owners think that because we're immigrants, we're not important. Because we're immigrants, we're not important. For them, they want the money to arrive every month without doing anything for us. We have this need to live in an apartment, but not live like this. No one argues that landlords, whether a teacher renting out the home her parents raised her in or a professional company, no one argues that landlords shouldn't be able to make a living. Of course, rental housing is a business. You provide a decent place to live, but in exchange for collecting people's hard-earned money and rent each month. But if your building's full of mold and mice and doesn't have working showers or a working stove, you're not holding up your end of the deal. That's not a real business, and families are paying a very high price for it. Investors increasingly structure their purchases through LLCs and real estate investment trusts with different names for each property or fund. When owners hide behind LLCs, it makes it impossible to track down the neglected properties they own and the tenants they force out. This leaves local leaders like Ms. Martin with only two options. Let investors continue to run down neighborhoods and run out residents, or use time and money they don't have to connect with other local leaders to track down bad owners one by one. For investors, home and rent increases are distilled down as returns to shareholders, code violations, and eviction filings, simply the cost of doing business. But for Ms. Martin and from Ohio, the residents of Cleveland and South Euclid, these are their homes. These are their neighborhoods. No one seems to be tracking their returns. When Matthew Desmond, the author of the book Evicted, signs copies of his book, he signs it with the words, home equals life. Those of us lucky enough, and I assume everybody in this room enough to go home each night to a safe home in a decent neighborhood with an affordable place, may not think about it as much, but it's a simple truth. Where we live matters. It determines so much about our lives and our children's lives. I look forward to hearing from our witnesses today about how we strengthen our homes and our neighborhoods with investments and protections that will make it easier for people to find safe and decent and affordable homes, how we can give local leaders like Ms. Martin and Mr. Waller the tools they need to improve the homes of all families in Cleveland, in Atlanta, in Pittsburgh, and across the country. Senator Toomey.
Thank you, Mr. Chairman, and welcome to our witnesses. In October, this committee held a hearing criticizing people who invest in and even build rental housing. Looks like that's on the agenda for today's hearing as well. Maybe part of the reason is a desire to change the subject from the failing Biden economy. This morning, we got a new inflation number. Inflation came in at 7.5%, the worst inflation in 40 years. And housing costs are skyrocketing even faster than the general rate of inflation. Rents increased around 12% last year. Home prices jumped an astounding 17%. And whether you are a renter or a home buyer, housing is taking up more and more of your paycheck, with inflation quickly eroding most of the rest. Now, wages are rising, but inflation is rising faster. And that means workers are falling further and further behind in the Biden economy. This is a direct result of the administration's massive overspending, and the administration is desperate to find someone else to blame. There's actually nothing wrong with people renting houses instead of or before they become homeowners. And there's also nothing wrong with investors, whether institutions or individuals, putting their own money to work to meet the need of these renters. It's a simple issue of supply and demand. Institutional investors happen to be the ones with the deepest pockets, the one with the most capital available to invest in building and the new housing stock that America needs. Just imagine how expensive housing stock would be if some of my colleagues got their wish and most institutional investors were driven out of the housing market. Instead of blaming those who actually build housing stock, we should probably take a look at the role that Democratic policies have contributed to the high cost of housing. Housing's expensive and getting more expensive in part because the administration has doubled down on 50 years of failed big government housing policies. Its illegal eviction moratorium, for instance, deterred landlords from investing in new housing stock and almost certainly contributed to rent increases. Its March 2021 wasteful $1.9 trillion spending bill included almost $22 billion in rental assistance, even though $25 billion in rental assistance Congress provided the year before was not even close to being spent. And this reckless tax and spend Build Back Better plan seeks yet another $35 billion in rental and down payment subsidies that will further increase the demand and push up prices in housing. The administration has also broken from decades of bipartisan efforts to reform the failed GSE model that now subsidizes the purchases of even million-dollar homes. And it's pushed the GSEs to take on more loans to risky borrowers. Today we'll hear from two witnesses, Tobias Peter and Joel Griffith, about the negative effects that these failed policies have had. They'll testify to the role of monetary policy in contributing to rapid house price inflation, and they'll testify to the increase in risky mortgage lending at the GSEs. Their testimony will make it clear that we need a different direction to improve housing affordability for all Americans, whether renters or owners. We should pursue reforms that leverage the power of free enterprise to increase housing supply and make markets more competitive. To that end, we need to scale back the role of government, increase the role of private capital. We need to phase out demand-side subsidies that just drive increases in housing prices and rents. And we need to end the failed GSE model that fosters excessive risk-taking and risks more taxpayer bailouts. We also need to end the GSE conservatorship that confer on the government far-reaching powers to replace market forces with executive fiat. The state of the housing market affirms the urgency of the reform. The housing market is cyclical. It's really a question of when, not if, there will be a housing downturn. And the housing finance system is not prepared. The system is still dominated by the very same GSEs that did so much to cause the 2008 financial crisis. The $7 trillion behemoths actually have an even bigger market share today than they had before the crisis, and they certainly remain too big to fail. And just as before the financial crisis, these flaws in the system continue to encourage excessive risk-taking. They risk future taxpayer bailouts. They undermine market forces and threaten financial stabilities. And they do very little to make housing more affordable. So 50 years, and many hundreds of billions of dollars in federal housing assistance have been spent, and they have had no meaningful impact on home ownership rates. It was 64% in 1970. It was 65% in 2021. Now, last month, the chairman reiterated the housing finance reform principles that he had released in 2019. I would observe that his principles significantly overlap with the reform principles that I've released. I look forward to continuing to work with the chairman to see if we can get to a consensus on how to move forward on this really important issue. And I hope the administration will finally engage on this reform. Treasury has still not met its obligation to deliver its reform plan to Congress. It's now 4 months overdue. So instead of shifting blame for the reckless mismanagement of the economy, the administration should be looking for opportunities for bipartisan legislation like housing finance reform that relies more on free enterprise and less on government to make housing affordable for all Americans, whether they own or rent. Thank you, Mr. Chairman.
Thank you, Senator Toomey, and I'm hopeful, too. I think that, I think you'll probably agree with this, the first step to GSE reform is that we move as quickly as we can to confirm the nominee to FHFA, Sandra Thompson, and then I'm hopeful the administration and expect the administration to engage in this, but we can talk more about that. Let me introduce the 5 witnesses. Michael Waller is the executive director of Georgia Appleseed, which is dedicated to providing strong, nurturing schools and a healthy home for all of Georgia's children. He served previously as an attorney with the FTC, as a staff attorney with Atlanta Legal Aid, and as an attorney at WilmerHale. Welcome, Mr. Waller. Anita Melinda, who is here remotely, is a New York City tenant in a building owned by private equity firms. She's been organizing with her neighbors in response to her landlord's actions. Ms. Melinda, welcome. Tobias Peter is a research fellow and assistant director at the American Enterprise Institute Housing Center. He previously served as a director of research with the Housing Center. Welcome, Mr. Peter. Joel Griffith, who was in committee yesterday, actually, as a research subcommittee yesterday, as a research fellow at the Institute for Economic Freedom and Opportunity at the Heritage Foundation as a native of Ohio. Welcome, Mr. Griffith. Sally Martin is the director of building and housing for the city of Cleveland. She just joined Mayor Bibb, the new mayor's cabinet just this week. Until earlier this month, she served as a housing manager and director of housing for the city of South Euclid, a Cleveland southeast side suburb, where she had worked since 2008. She served on the executive committee of the Vacant and Abandoned Property Action Council in Cleveland. We will now hear from the witnesses. Mr. Waller, start with you. Welcome.
Thank you, Chairman Brown, Ranking Member Toomey, and other members of the committee. Again, my name is Michael Waller. I serve as the Executive Director of the Georgia Appleseed Center for Law and Justice. Georgia Appleseed is a nonpartisan, nonprofit law center. We're dedicated to advancing justice and equity for all of Georgia's children through law and policy reform, community engagement, and legal representation of children. We focus our efforts on removing barriers to injustices that are faced by Black and brown children, children experiencing poverty, LGBTQ+ children, children with disabilities, and children in foster care. And Georgia Appleseed believes that justice requires that every child has access to strong, nurturing schools and a stable, healthy home. This morning, I will provide information on the impact of institutional landlords on the lives of low-income Georgians. And I'm going to begin by sharing a story, the story of April. She lives in Albany, Georgia, in an apartment complex owned by an out-of-state institutional investor. And this morning I'm going to use the term institutional landlord and institutional investor somewhat interchangeably. And what I'm referring to is a corporate owner that is usually out of state, owns multiple properties, is primarily in the business of investing money, not managing rental homes, and has little to no direct contact with the communities where the properties are located. So Georgia Appleseed and our other community partners have identified a common business model among some institutional investors in low-income housing, and it goes something like this. The investor comes into the community, purchases the property. They quickly drive up rents. They impose novel and unwarranted fees. They refuse to provide upkeep and basic maintenance. They abuse our eviction systems, and they hide from accountability. These institutional investors concentrate these practices in Black and brown communities and low-income communities, and so they're perpetuating historic injustices there. Now, April is a single mom to a teenage daughter, and she's also the primary caretaker for her mother, who has multiple sclerosis and needs a wheelchair. April rents her home, like most Albany residents and millions of other Georgians. Well, soon after she moved in, sewage began regularly coming up through the bathroom drains and also pooling in the yard outside where the children played. Bees came out of her HVAC vents, mold grew on the walls, shooting and criminal activity were common in the complex. In fact, after one of these events, there were bullet holes in her windows. Other residents had very similar problems and complaints. Neither the property management firm, who is her direct contact with the landlord, nor the out-of-state landlord would make the needed repairs. The local housing code enforcement office and other local government offices and officials claimed that they were powerless to force the absentee landlord to make the property safe for habitation. So April contacted Suiga Rising, which is a local nonprofit. Together, they began to work to organize their neighbors, talk to their neighbors, and also contact the media. In response, the landlord sent a letter threatening the residents with eviction, and this threat worked. The residents ceased their campaign for better living conditions. April's landlord recently gave her 30 days to get out. And she feels like she doesn't have anywhere to go because in Albany, like many places, there are very few affordable places to live for someone in a wheelchair. So, residents across Georgia suffer similar injustices every single day. But here's what we at Georgia Appleseed and our partner organizations have found, and this is listed in more detail in my written testimony. In Georgia, institutional investors are particularly known for instituting aggressive year-on-year rent increases and novel fees. And here are some examples of these fees. One-time activity fees, pest control fees, utility service fees, a renter's insurance fee, valet trash fees, package locker fees, common area electric fees, early termination fees that can be 3 times a month's rent. I could go on and on with these fees. They're just a few. Institutional landlords increase their profits and reduce costs by refusing to perform needed repairs, just basic maintenance, security, or needed health and safety measures. And this leaves tenants living in miserable living conditions, miserable. And it's often virtually impossible to hold these landlords accountable. Out-of-state shell companies hide the owners, and tenant advocates and governments simply can't identify them. Institutional landlords are well positioned to abuse Georgia's eviction and housing safety laws and ordinances. Eviction costs are very low. Court procedures favor landlord attorneys and maximize the efficient disposition of evictions, not the preservation of tenancies and healthy homes. In addition, our local housing safety enforcement is chronically under-resourced. Moreover, Georgia law prohibits local communities from registering and inspecting properties without probable cause. So I'll conclude by saying we have found that this is profit-mongering at the expense of families and communities. It is not investment in affordable housing. These unsafe, unstable housing exacts real, long-term, and devastating costs on the physical and mental health of children and families. It threatens their educational achievement and employment potential. It increases criminal justice involvement and reduces overall community wealth and well-being. So Chairman Brown, Ranking Member Toomey, other members of the committee, thank you again for the opportunity to share my experience and the experiences of fellow Georgians with you today. I look forward to answering any questions.
Mr. Waller, thank you. Ms. Melinda is recognized for 5 minutes. She is remote from New York. Ms. Melinda, welcome.
Chairman and members of the committee, thank you for the opportunity to testify before you today. My name is Annetta Melenda, and I'm a New York tenant in a building owned by private equity and a member of the Greenbrook Tenants Coalition. I've lived in Brooklyn, New York for 6 years. I moved into my current apartment last winter in the middle of the pandemic. I signed a 1-year lease for just over $2,500 a month. It was pricey for an apartment measuring just over 400 square feet, but not out of the ordinary for Brooklyn. In just a few months, my building was bought by a private equity firm called Greenbrook Partners through a joint venture with the Carlyle Group, the third largest private equity firm in the world. When my lease expired in November, my new landlord told me they needed to reevaluate my rent based on the market bouncing back. They suggested nearly a 50% increase from what I had been paying. That's right, that's a 50% increase, which would put my rent at about $3,800 per month. There was no way I could afford it. This was all happening while Omicron was surging. I tried to negotiate. I sent them listings of other apartments in the neighborhood, some even on my block, to show that the increase was unreasonable for what was available in the area. Eventually, they were willing to come down on the rent, but when they sent me the lease renewal, there was a section that gave the landlord the right to terminate my lease at any point and double my rent with only 30 days notice. It was clear they wanted me out. I've continued to pay my rent on time every month, but the landlord has stopped cashing my checks. I suspect they are getting ready to start eviction proceedings against me. The eviction moratorium in New York ended just last month. My sense of security is gone. This is not an isolated incident. In talking to my neighbors and tenants in other buildings by the same landlord, we notice similar patterns: massive rent increases, evictions, hazardous violations, and harassment. The confusing ownership structure makes it hard for tenants to know who truly owns our buildings. My neighborhood of Bedford-Stuyvesant is considered to have one of the highest concentration of Black residents in the United States, according to census data. In New York City, eviction rates in zip codes in which a majority of residents are people of color are 3 times as high as rates in zip codes that are predominantly white. I'm not surprised that these predatory firms are targeting predominantly Black and brown neighborhoods. Many of these companies go to pensions for capital to expand their portfolios, in some cases pricing out union members and the retirees that they are acting on behalf of. Greenbrook Partners and the Carlyle Group are just 2 of the many predatory real estate firms that are fundamentally changing housing across the country. These companies treat housing as an investment vehicle rather than as shelter. But this is my home, and it serves the purpose of keeping me safe, warm, and out of the elements. This is a basic human right. Institutional landlords want us to believe that private equity is a tiny player in housing. It's just not true. According to the Financial Times, private equity has had its busiest month in the last 6 months in the last 40 years, and the industry shows no signs of stopping its expansion into our homes. In just 2 years, my landlord purchased at least 137 properties in Brooklyn, all during the pandemic. These firms promise their investors returns while obscuring the devastating consequences on everyday people and our families. They buy up homes all across the country that would have otherwise been affordable. As our communities face the trauma and grief from mourning loved ones, losing jobs, following guidelines to stay home to mitigate the spread of the virus, these predatory firms made it impossible to feel any sense of safety in our homes. We saw our communities come together to support each other. Meanwhile, Wall Street took the opportunity to rake in unfathomable profits. This tangled web of high finance is incredibly difficult to navigate for tenants like myself. The ruthless business model is entirely reliant on disaster capitalism and systematic displacement of working class people. Our basic human right to housing is being exploited. As a tenant directly impacted by these predatory practices, I am asking that you consider establishing comprehensive, nationwide tenant protections like rent control, prohibition on excessive fines and fees, just cause evictions, and a tenant right to counsel. The housing market is rapidly consolidating as the largest landlords, builders, and investors increasingly partner with one another. Our neighbors all across the US will continue to feel the consequences. But I can promise we will continue to grow a strong tenants movement to demand a more just housing system. Senators, you have a choice to make. You can either allow institutional landlords to use our homes as investment vehicles in an effort to generate endless profit, or housing as a human right. Thank you.
Thank you very much, Ms. Melinda. Mr. Peter is recognized for 5 minutes. He's in the room. Thank you, Mr. Peter, for joining us.
Chairman Brown and Ranking Member Toomey and distinguished members of the committee, thank you for the opportunity to testify today. The housing market is changing, and the real culprit is a massive house price boom fueled by federal housing and monetary policies, which is increasingly crowding out lower-income Americans out of the housing market. Institutional landlords, particularly on the multifamily side, are taking advantage of more liberal credit terms provided by Fannie Mae and Freddie Mac, the GSEs, than the private sector, which is a violation of their charters. They use their taxpayer guarantee and other advantages to greatly expand their businesses while crowding out multifamily private investors. Since 2014, outstanding multifamily mortgage debt has doubled, with the GSEs accounting for most of the growth. At the same time, they tout that they are supporting affordable rental housing, but in reality, they have created government profit-seeking. The current single-family housing boom, which began in 2012, was entirely foreseeable and was noted by the AEI Housing Center beginning in 2013. Since then, the housing market has been marked by too much demand chasing too little supply. Yet the policy response was to boost demand even more. Federal housing agencies have loosened underwriting, and the Fed has pursued multiple rounds of quantitative easing, continuing even when the housing market was already appreciating over 10% per year. In 2021, home price gains were 16%, and in 2022 are expected to come in at around 12%, the third year of breakneck growth. As a result, homeownership has gotten further out of reach for many lower-income minority Americans. Consider that since 2012, wages have grown 40%, but the entry-level home prices have increased over 100%. This out-of-control price spiral means increased competition for fewer and fewer affordable homes. Potential entry-level buyers are increasingly pushed to the sidelines as they cannot compete with more deep-pocketed individuals who experience the same competition only high up the price spectrum. This is creating knock-off effects for people downstream. Left unable to buy a home, people remain in their rental pool, helping to drive up rents, which are now increasing at 12% nationwide. Many who cannot afford these rent hikes will be pushed into homelessness. If that were not enough, inflation is now running at 7.5%. A Gallup survey from last month finds 49% of Americans saying rising prices have caused hardship for their family. Lower-income Americans are suffering the most. 2/3 of U.S. adults with an annual household income of less than $40,000 say they have experienced hardship, with 20% describing it as severe. Inflation is a regressive tax, and getting by, not to mention building savings to buy a home, is becoming increasingly difficult. Thus, these misguided policies have severely hamstrung lower-income Americans, in particular minorities, which severely lag white Americans in homeownership and intergenerational wealth. If they can no longer reach the first rung of the housing ladder, how will they ever catch up? The solutions are straightforward. First and foremost, we need more supply. However, federal mandates are not the answer. Zoning and land use policies are fundamentally a state and local issue and should be addressed at those levels. We are already seeing promise across the country, even in California, where the legislature has recently passed laws which could meaningfully encourage new construction activity. At the same time, demand boosters have shown to be counterproductive. The Fed has belatedly realized that it needs to tighten the monetary spigot, but its policies have already done a lot of damage, and they will continue to haunt lower-income Americans in the form of higher home prices, inflation, and rents. The signals from federal agencies and regulators are less than encouraging. Rather than shrinking the government's footprint and reducing risk, Fannie Mae is again increasing the share of risk-layered loans, where one risky loan product feature is layered on top to ultimately create a very risky loan. More could be in store. FHFA recently made policy changes that increase GSE competition with the private sector and will lead to greater risk layering. The GSE affordable housing goals may also be increased, and other policies are being discussed. The FHA is also considering changes that will increase its competition with the GSE, which does not bode well. Equally worrisome are increases to the GSE's appraisal waiver practices, particularly purchase loans. In the past, human appraisals have successfully alerted lower-income and minority borrowers when they were overpaying. An appraisal waiver may simply confirm the negotiated sale price, while the competition between Fannie and Freddie for market share may create a race to the bottom on standards. Not to mention that these processes can be gamed, which was commonplace with respect to the GSE's automated underwriting systems in the lead-up to the financial crisis. The compounding effect of these changes will mean less resiliency for borrowers and neighborhoods, many of which are lower income and minority, to withstand an economic stress event. We have seen this movie before, and we know how it ends. It should not be allowed to happen again. Thank you.
Thank you, Mr. Peter. Mr. Griffith, welcome.
Thank you, Chair Brown, Ranking Member Toomey, and members of the committee. My name is Joel Griffith. I'm a research fellow at the Heritage Foundation. The views I express are my own and should not be construed as representing any official position of Heritage. Families are feeling the impact of the steep rise in home prices and rental costs. Spanning the pandemic era from February 2020 through this fall, home prices soared more than 27%. Over the past year alone, home prices are up close to 20%. Residential property prices in the United States, adjusted for inflation, are now just 2% below the all-time record levels in 2006. Home prices are increasing far faster than family income growth. The home price to median income ratio is now near the prior record high set in 2005. And despite near record low interest rates, the mortgage payment to income ratio hit 32.7% this fall, the highest level since 2008. Imagine this, a return of mortgage rates even close to the historical average would increase a mortgage payment for a new borrower by 50%, even with no additional increase in home prices. And of course, renters have not been spared. Median apartment rental costs have jumped more than 15% nationwide this past year, and numerous cities, not just on the coast, have experienced rent increases well in excess of 30%. So why are housing prices and rental costs rising faster than usual? Well, institutional owners of rental properties are being scapegoated for the rise in home prices and rental costs. Institutional investors own fewer than 2 in 1,000 of all single-family homes and just 1 in 100 of all rental homes. In fact, in no single state does an institutional investor as a whole own more than 1 in 100 of all available housing units in the state. The bottom line is that institutional single-family residence ownership is not measurably impacting local home price dynamics on the upside. Here's the reality. The primary driver of rising prices nationally are government subsidies. This is increasing mortgage borrowing and demand for housing, leading once again to higher home prices and increased taxpayer risk. Government-sponsored enterprises, namely Fannie Mae and Freddie Mac, continue to dominate the mortgage market. Investors who purchase these GSE bonds and these mortgage-backed securities know that taxpayers will make good on the promised cash flows from the mortgages underlining these Fannie and Freddie MBS products. This leads to riskier lending because it allows investors to ignore the true financial risks of the underlying mortgages and securities. And of course, we have our own Federal Reserve continuing to purchase MBSs in mass. Since March 2020, the Federal Reserve has driven down mortgage interest rates and fueled a rise in housing costs by purchasing more than $1 trillion worth of mortgage-backed securities from Fannie Mae and Freddie Mac and Ginnie Mae. The nearly $3 trillion of these mortgage products owned by the Federal Reserve is 88% higher than levels of just 2 years ago. This decline in long-term interest rates has induced and enabled borrowers to take out bigger loans, and this has fed the rise in prices that is pricing families out of the marketplace. Of course, state and local governments bear responsibility as well. On the local level, stringent zoning regulations, density limitations, and aggressive environmental regulation are limiting the supply of housing while increasing the cost of construction. These local regulations can account for more than 30% of the cost of new affordable rental housing construction, and rent control is further compounding the problem. Capping rent increases does nothing to make housing costs less to build, but it does shrink the future supply by deterring new construction while incentivizing landlords to spend less money on upkeep and remodeling. Just talk to any number of residents of public housing projects across New York City. So what can be done to address these housing prices? First, policymakers should consider severing the special status given to the GSEs. Second, we should raise Fannie Mae and Freddie Mac mortgage guarantee fees immediately while the GSEs remain in conservatorship. This would make interest rates on non-government guaranteed mortgage loans more competitive. We should eliminate the geographic price differential for conforming loan limits. Consider that just this past year, the conforming loan limits for Fannie Mae, Freddie Mac increased 18%. You can get a loan guaranteed for up to $642,000, and that's the standard. In these high-cost areas, the loan limits guaranteed are approaching $1 million. And we should also reject eviction moratoria on the state level and on the federal level. Initially, that decrease in cash flow from an eviction moratorium affects the landlord only, but landlords will increase rents to mitigate this heightened risk of future moratoria and to recoup the revenue that they lost over this past year. Ultimately, eviction moratoria result in fewer affordable housing units that will be constructed. The economy will benefit if Congress will work to make housing more affordable by gradually removing these federal guarantees and subsidies and by eliminating these federal mandates. And of course, state and local governments continue to bear a responsibility to eliminate their own artificial barriers to housing affordability. Thank you for the invitation. I look forward to your questions.
Thank you, Mr. Griffin. Ms. Martin, calling from Cleveland. Welcome.
Good morning, Chairman Brown, Ranking Member Toomey, and members of the committee. My name is Sally Accordi Martin. For almost 14 years, I've served as the housing director for the city of South Euclid, Ohio, an entering suburb on the east side of Cleveland. Currently, I'm the director of building and housing for the city of Cleveland. One of the after effects of the decline in the housing market has been the dramatic rise of business buyers of single-family homes. The bargain basement prices of the past decade and a half led to an unprecedented rise in the number of investors flooding the housing market. Even now, with rebounding home sale prices, we have not seen that trend diminish. Last month, I assisted an elderly resident with a housing choice voucher who was being evicted from her home of 19 years. The recent rebound in housing prices has enticed many local landlords to sell their occupied homes to out-of-state investors. In this case, as in many others I've seen recently, the tenant was on a month-to-month lease and the new landlord chose not to renew her tenancy and provided a 30-day notice to vacate. The woman was unable to secure other housing for herself, her sister with dementia, her granddaughter. They were all evicted from the home, with many of their possessions and medications left inside. It's not uncommon for these new landlords to introduce themselves to their tenants with notices of large rent increases, making the remaining in the home completely unworkable. In this case, the new landlord was the SFR3 Fund, an LLC from Mill Valley, California, with the mission statement of acquiring, renovating, and renting thousands of single-family homes. Unlike mom-and-pop landlords, large out-of-state investors typically don't have much empathy for their tenants. Residents can be a day late in paying rent and face an eviction notice. In this case, the tenant had never been late on rent, but the landlord refused to allow her to remain in the home as he realized that he could get a higher rent from a non-subsidized tenant. For the past couple of years, my office has received many calls from tenants in similar circumstances. Prospective homebuyers are finding the market nearly impossible to navigate. In South Euclid, a community with traditionally modest home prices, cash offers and bidding wars have become the norm. Buyers requiring mortgages are unable to compete. Desperate home buyers are borrowing from 401k funds, relatives, or even hard money lenders in order to compete with investors. For subsidized tenant, the market realities are sobering. When I began my position in 2008, South Euclid had approximately 300 housing choice vouchers in force. When I left this month, there were less than 200. Those with public assistance cannot compete with the market rate tenants able to pay the higher rents being charged. South Euclid, unlike many cities, has taken a proactive approach to protecting tenants by enacting pay-to-stay legislation and by passing a comprehensive anti-discrimination ordinance, including source of income protection. Even so, we can't stop many of the predatory behaviors we're seeing in the market. Currently, the majority of the 1,600 or so rental units in South Euclid are owned by out-of-state and international investors. Even with the higher sale prices, investors are insatiable in their demand for more and more houses. Residents are bombarded with postcards, text messages, and other marketing materials offering to buy their homes for cash. South Euclid has passed a number of ordinances designed to hold rental property owners accountable, including having a registration and inspection requirement, requiring owners living outside the area to name a local agent in charge, and not allowing the registration of rental properties with delinquent property tax balances. By taking these actions, we've successfully driven out many predatory landlords from the community, but it feels like an uphill battle. Not surprisingly, research conducted by City of Cleveland data analyst Dr. Tim Kobe shows a dramatic and alarming increase of business buyers, especially in communities of color on Cleveland's east side and in the racially diverse inner ring suburbs of Cleveland. For Cuyahoga County as a whole, business buyers nearly tripled from 2004 to 2020. A white paper on these findings will be published this month by the Vacant Abandoned Property Action Council, an ad hoc group of community development professionals in Northeast Ohio that is chaired by housing researcher Frank Ford of Western Reserve Land Conservancy. For several years, Frank Ford has published an annual study on bank lending by Greater Cleveland neighborhood that has shown that on the east side of Cleveland, only 18% of home purchases are associated with a home purchase loan. The entire east side of Cleveland, a majority-minority area, has become a cash market dominated by investors. In order to rectify these issues, the public and private sectors must collaborate. Middle neighborhoods and low and moderate income areas continue to lose ground in homeownership, and tenants are subject to increasing rents, making attaining the dream of homeownership nearly impossible for many and leading to housing instability on an unprecedented scale. Thank you.
Thank you very much, Ms. Martin. I will begin the questions on, start with Mr. Waller. On Tuesday, we heard from tenants whose ceilings had fallen in, who lived with pests and rodents, who had seen rent go up 50% in a single year. A lot of people might ask, why don't they just move? You gave a good example of a renter in Albany. You know renters in Georgia who face conditions like this. Do they have the option to just move?
Thank you, Chairman Brown. No, moving is difficult for anyone under any circumstance. In this case, folks find that they don't have other options. There just simply aren't places to move to that they can afford. So I've spoken with tenants who live in mobile homes where their children have fallen through the floor, where there are mobile homes that don't have electricity, and they're still paying monthly rent because they have no place to go. On top of that, there are direct and measurable costs. There are early termination fees in some cases, sometimes as much as 3 times the monthly rent. You have a child in school, you'd have to remove them from that school, and if your child has a disability, you'd have to transfer their individualized education plan. This is difficult. You have to consider your job. You've got a job perhaps, and you have figured out a way to get there, and moving to a new place in a new community, because you won't necessarily find another home in your neighborhood, is going to produce additional challenges. And then there are moving costs, security deposits, just goes on and on. They just don't have that option.
Thank you. Ms. Martin, a question for you, and congratulations on joining the mayor's cabinet. I'm a resident of Cleveland, and I look forward to working with you for that reason and for so many others. While you were with the city of South Euclid, you helped start the Vacant and Abandoned Property Action Council. Why did you start this council in the first place? How did the council help you and other local leaders address the problems that you point out?
Well, I should say first off that I did not start the Vacant Abandoned Property Action Council. That actually started in 2005 as a response to a study done by Joe Schilling out of Virginia Tech called Cleveland at the Crossroads. So since 2005, this group has been meeting monthly, pulling together stakeholders from educational institutions, all different cities and the county government, to discuss a collective response to the issues that were plaguing neighborhoods with vacant properties. So the research that continues today through the organization has proven invaluable to us working on the ground in neighborhoods to try to address the challenges we were seeing. And I am very much looking forward to working with you as well.
Thank you. Ms. Melinda, you have experience bringing people together around a common cause in Bedford-Stuyvesant and beyond, and you still face significant challenges finding and communicating with other tenants in your situation. What were some of the practices that your landlord engaged in that led residents from your building and other buildings and across the city to organize, come together, and advocate for improvements?
Right, thank you for the question. You know, when you lose your home, you lose so many important things in your life, from stability, community, neighbors, friends, you know, potentially a job change, school change for your children. And our organizing really started with the 30-unit apartment in Park Slope, where Greenbrook bought the building and immediately sent notices to vacate to the tenants there with 90 days notice. Many of those tenants left and very few stayed and fought back. when we started to do research around who this landlord was, we realized that, at first they bought a dozen buildings, then it was 40, then it was 100. The last I checked, it was 138 buildings. And I think what really stood out here is that Greenbrook has particularly egregious practices, in particular around evictions and the massive rent hikes that many of us were experiencing for the very first time ever. And that's what really pushed me over the edge when I got my 50% increase, to start to connect with other neighbors and start asking questions. And I do have experience in the labor movement. And so I knew that bringing people together and starting conversations and building power would create a space for us to start asking questions like, is this legal and what can we do about this?
Thank you, Ms. Melinda. Ms. Martin, back to you. We heard from the panel that only 1% of homes in this country, rental homes are owned by institutional investors. But we also know that trends in the last few years that 30% of purchases are institutional investors, which tells you where we're going to end up. How do these investors affect the communities and the cities where they buy up homes?
Well, what I've seen in my practice as being in charge of code enforcement is that maintenance tends to go down, rents tend to go up, and tenants becoming displaced. Many tenants with month-to-month rents are just receiving huge increases, in some cases 50% more per month, and they can't sustain it. So we see fewer opportunities for those with housing choice vouchers to find housing as well. So as I described in my testimony, we lost a large proportion of residents who had housing choice vouchers. So it's detrimental, especially to lower and moderate income residents. They're having very little luck finding houses to purchase or finding houses to rent.
Thank you, Ms. Martin. Senator Toomey.
Thank you, Mr. Chairman. Mr. Peter, we've discussed how much rents have increased. I think it's something like 12% across the country last year alone. Some of this hearing seems to be an attempt to blame institutional landlords for these, but it's been pointed out by Mr. Griffith what a very, very small percentage institutional owners own in the housing market. But it's also important, I think, to note that rent's gone up a lot. Housing prices have gone up even more. All right, I think as of November, year-over-year prices, according to FHFA, are up about 17% nationally, much higher in some markets, lower in others, but 17%. And so I guess my question is, I would tend to expect that renting a house, which is, let's face it, that is a substitute for owning a house, that they're going to tend to move together. So let me ask you, Mr. Peter, over the medium term, let's say, should we expect housing prices and rental rates to generally move roughly together and in the same direction?
Yes, Ranking Member Toomey, you are absolutely correct. Over the medium term, we would expect to see home prices and rents to move in lockstep. And for the reason that you pointed out, those are near substitutes. However, over the short term, there can be discrepancies that arise, and those discrepancies can arise because many investors are landlords and mom and pop shops who generally only tend to raise rents when there's a turnover. Right. And there's generally about a lag of about a year between rents and home prices, so we're going to see a lot more rent rises in the future.
Right. So there's a sticky element because people are locked in a given lease. So, there's a very old economic truism that the solution for higher prices is higher prices. And, of course, what's meant by that is that when people see the opportunity to make more money because price of something has gone up, it brings new entrants into the market. They create more supply. That tends to reduce the prices, and thereby you have a solution. So we've also heard that a lot of folks have no place to move, which sounds like a supply problem. And high prices normally call for an increase in supply. So could you talk a little bit about why we're not seeing a huge surge in supply in the face of these rising prices? And specifically, are local governments partly to blame for this?
Yes, absolutely. I mean, there's a common saying that demand responds quickly, supply responds slowly. And in particular, in the housing front, the reason why supply responds so slowly is because we have artificially limited what and where we can build. And this comes down to the mistaken notion by elites that they can produce better outcomes than the market. And so they have used zoning, they have used environmental review processes, they have used urban growth boundaries. In some instances, they have used rent control in some cities to really slow down what the market has been doing. And this has resulted in this massive housing shortage and massive unaffordability that we've been seeing. And this is very much more pronounced in these high regulation states.
Right. Let me go to Mr. Griffith for a quick thought here. So the GSEs clearly led us into the 2008 financial crisis through excessive risk-taking. Congress established FHFA to be a tough regulator to make sure that never happened again. But rather than being the cop on the beat, it seems the Biden administration's intent is to turn FHFA into a co-conspirator with the GSE. And what we're seeing is all kinds of policies that undermine, I think, seem to undermine the GSE's financial condition, whether it's reductions in GSE's capital requirements, lowering G fees, suspended restrictions on risk layering, and on and on. Here's my question for you. Does it ever feel like they could be setting up for repeating the mistakes that led us into the 2008 financial crisis?
Thank you, Ranking Member Toomey. Well, regardless of whether or not the current state of the housing market completely mimics what happened in 2006 with the collapse of home prices of 30 and 40% across the country, even if that does not happen, the pain that the GSEs are inflicting on the American families, it's undeniable. And by that, I'm referencing the home prices that are at all-time record levels right now. Whether those prices collapse or whether they stay elevated, American families are severely impacted. And the only way to have a way out of this without a even more prolonged period of sharp contraction would be to gradually remove their footprint to allow prices to gradually return to something that is more affordable.
Thank you.
Thank you, Senator Toomey. Joining us from his office is Senator Menendez, and after Senator Menendez, I believe, will be Senator Tester. So if you can line up that way, Senator Menendez from New Jersey.
Thank you, Mr. Chairman. There is a massive racial home ownership gap in this country, which is a serious problem because owning a home is a key to building intergenerational wealth and reduce racial wealth inequality overall. According to the Census Bureau data, the white home ownership rate is about 74.4% compared to about 43.1% for African Americans and 48.4% for Hispanics. So, Ms. Martin and Mr. Waller, what are some of the barriers to minority home ownership, and how do large commercial landlords mitigate or exacerbate those obstacles?
Yes, hello. I could respond to that. What we have discovered in Northeast Ohio through the analysis done by Frank Ford of Western Reserve Land Conservancy, who is the chair of APAC, is that lending disparities are very real. And we're finding that majority-minority neighborhoods do not have equal access to credit. So essentially, we still see redlining going on in those neighborhoods. We also see very disturbing trends where Black borrowers, even high-income Black borrowers, are having less of an opportunity of getting mortgage capital than even moderate-income white borrowers. So Frank's research is very startling in that. It's very clear, as stated, in some of our low mod areas, there is almost no opportunity for homeownership as it's become a completely investor-dominated market. There are essentially few to no mortgages being written in some parts of our community.
And if I could add, Senator, these practices and these types of landlords are often concentrated in low-income and Black and brown communities. The effect is that they're extracting wealth from these communities, and to buy a home, you need wealth. You need to build up money to pay for your down payment, also have stable income. And so these practices, because they put so much pressure on the families that live in these homes, that are renting these homes, they're often feeling like they're in a constant state of fiscal emergency. And that's very difficult under those situations to have the kind of stability that lends itself to the purchase of a home. Thank you.
Well, thank you. Well, I'm concerned the fact that institutional investors in real estate are potentially squeezing minority first-time home buyers out of the market. According to the National Association of Hispanic Real Estate Professionals, one of the critical barriers Latino home buyers face is that Latinos are overwhelmingly concentrated in areas of the country with acute housing shortages. So, what can we do to ensure that first-time minority home buyers have a fair chance at competing with deep-pocketed institutional investors?
I think first and foremost, we need to make mortgage capital available. I think we need to provide some backstops to keep the investor behavior curbed in some of these areas where they're just essentially raiding neighborhoods.
And I would add that, it's a multifaceted problem. So there's a lot of different solutions that need to be employed. So I think some kind of, direct spending to state and local governments, mission-driven nonprofits to help actually increase supply, which is not increasing. It's not increasing fast enough. There simply isn't enough affordable housing in Georgia. Also, local governments need better information about these types of investors and institutions in order to make decisions at the local level to help increase supply.
Okay. Now, more and more housing is bought up by institutional investors. I'm concerned about the lack of transparency this is creating in real estate ownership. Imagine a scenario when an unoccupied house needs maintenance, where the neighbors cannot notify the owner because the house is owned by an anonymous LLC. Ms. Melinda, how does the difficulty to determine and communicate with the true owner of a property negatively impact neighborhoods? I'm thinking about the 2019 Harvard study of rental properties in Milwaukee that found that properties bought by LLCs became more likely over time to receive code violations, fall into disrepair, particularly in high poverty neighborhoods. In other words, corporate ownership can degrade the quality of housing, and that can have negative impacts not only for the tenants in those properties, but for the surrounding neighborhood.
That's exactly right, Senator. We see this all the time around, the paperwork that I got when my building was owned lists a different name than what I was told I should be sending my rental checks to. It's a very convoluted system of trying to investigate for folks like tenants, right, who don't have the skills and the research time and capacity to investigate this kind of really tangled web of who's in relationship with who. And the violations that you mentioned, I mean, these have included dangerous, unpermitted work and careless construction. We've heard, one of my neighbors in a different building had to get sent to the hospital for asthma from unmanaged dust and debris from construction that was unpermitted that was happening. And the entire Greenbrook portfolio, according to the New York City Department of Housing Preservation and Development, has received just over 3,000 total violations across their portfolio of just, 130 plus buildings.
That's pretty amazing. All right. Thank you, Mr. Chairman.
Thanks, Senator Menendez. Senator Tester from Montana is recognized from his office.
Yeah, thank you, Mr. Chairman and Ranking Member for having this hearing. We all have, all the senators on this in this group have offices all around our states. And I have heard with previous presenters that the institutional investors are 1, 2, maybe 3%. The interesting thing is you're right, that is pretty small of the overall pie. But I will also tell you that, and I don't think I'm alone in this, damn near every call I get that's a problem with housing is with institutional investors. And the points that are made by the people who are in these homes that can't move easily are, as these folks see an opportunity to take advantage of us, and they are, and it's wiping us out. And so it's not about blaming institutional investors. It's about getting people to do the right thing and have a little bit of compassion, just a little bit of compassion for your common man. But look, housing's been an issue. Montana struggled with a lack of housing before the pandemic. Folks want to move to Montana. I don't blame them. It's the greatest state in the union. A little biased in that, but it's the truth. But the fact is that the pandemic has made these challenges more difficult. So this is a question for you, Ms. Martin. During your time in South Euclid following the last economic crisis, you all worked to preserve local involvement and control of affordable housing so that it didn't get monopolized by big out-of-state investors. What did you learn from that experience?
Well, what I've learned as a code enforcement official is it's almost impossible to track down these investors. So as you said, they hide. Many of them are not registered with our Secretary of State. It's very hard to untangle who's responsible. We've gone to the lengths of actually questioning tenants about who they're paying their rent to because we couldn't get service on anyone. And as you might be aware, most code violations are criminal offenses. So for us to prosecute that, we have to perfect service on whoever the owner is, which can be very, very difficult. So again, in Cleveland, through our collaboration by working together through the Vacant Abandoned Property Action Council, we have helped make that a little bit of an easier process, but there are no legal safeguards that allow transparency in that way for cities to see who's really behind it. So for us to try to get control of dilapidated properties, we'll find a property with no heat, a property where the water has been cut off. It makes it very, very difficult. And also the environment of code enforcement having declining resources, so fewer code enforcement people in the nation, makes it even harder still.
It's interesting. Montana, a state with a population of just over 1 million people, we have some mobile home parks that have been bought by institutional investors, and we've had some other properties bought by institutional investors. And the kind of complaints that are brought forth and called into my office with pictures, I might add, are unbelievable. I mean, the Billings properties, for example, sent us pictures of what the water looked like coming out of their taps. And I guarantee if you drank it, you were going to be sick because it was not clear. It wasn't even close to clear. It was primarily brown. And then in the mobile home park in Great Falls, talked about the fact that over the time since the institutional investor bought this property, they did nothing but jack their rent and add fee after fee after fee, making it impossible for folks to be able to live there. And as has already been pointed out, it's not like folks can just pop up and move somewhere else. It's their home, number one. And number two, a lot of these folks don't have the resources to be able to move at the drop of a hat. Mr. Waller, we have seen success in Montana for manufactured housing communities converting to residential-owned cooperatives. Hopefully, you know about these ROCs. Are there other opportunities to improve communities by giving options like the first right of refusal or providing programs so that properties can stay affordable and stay in local hands?
Thank you for the question. Yes, I think in general, providing options to homeowners or potential homeowners or tenant and families that live in rental homes is exactly the right way to go. And that's the part of the issue we're talking about today, that folks do not have choices. So our state laws in Georgia are not set up to support tenant choice. In fact, it's quite the opposite. So those kinds of programs, I think, would have a beneficial effect.
Appreciate that. Once again, thank you, Mr. Chairman, Ranking Member, for having the hearing. Appreciate all the participants.
Thanks, Senator. Senator Van Hollen from Maryland's recognized.
Thank you, Mr. Chairman and Ranking Member Toomey. Thank all of you for your testimony here today. A few days ago, we heard testimony from a number of individuals who were impacted by absentee owners who were not taking care of the apartments that were owned. One of them was Juan Cuellar. He's a tenant at the Bedford and Victoria Station apartment buildings in Langley Park, Maryland. It's owned by an out-of-state publicly traded company. This community is about 84% Latino. Many recent immigrants, they often do not know their rights, and there's a huge sort of information disparity. Mr. Waller, this issue of information asymmetry obviously puts these kind of tenants at a disadvantage. Do you have thoughts on how we can address this so that those tenants can have a better ability to navigate these systems and protect their rights?
Thank you, Senator. Information is really important. So there are some basic low-hanging fruit that court systems and local governments could do, like providing things in languages that people can read, and also providing navigators so that people understand the law and what their rights are. But I would say that even so, even with knowledge, in many cases, tenants simply can't exercise their rights even when they know what they are, because there's a lack of legal representation for low-income tenants. In fact, it's virtually non-existent, despite the heroic efforts of our legal services attorneys across the country. And so local communities and states need to think about the benefits that they would receive if they would provide legal support to tenants. These are very complex litigation. I mean, a landlord and eviction case may move really quickly as 3 weeks in Georgia, but it's a very complex proceeding, and tenants just simply don't have a chance.
So we also have an issue where, tenants are engaged in making complaints, and they often go unheard and neglected, and problems build up. Sometimes it's pest infestation. Sometimes it can be deadly situations. We had back in 2016 in Silver Spring, Maryland, which is not too far from the Langley Park area I just described, an explosion that demolished 2 buildings and took 7 lives, injured 30 people, displaced 100. And there was an investigation that determined there were lots of problems and missing things that had happened here. There was finally a settlement that was not disclosed. But the NTSB did look into it, the National Transportation Safety Board, and they concluded that a number of tenants in the building had reported smelling gas in the lead up to this deadly explosion, and that those reports went unheeded. Nobody reported the smell of gas to the gas company. And as a result, 7 people died and 30 were injured. Can you talk, and others just in my remaining time, about how we can change the systems and incentives in a way to prevent that kind of deadly tragedy? This was, again, a building primarily populated by recent immigrants, and people were just not listening to their complaints.
That's an extraordinarily tragic event, and those kinds of tragedies do happen in Georgia as well. One of the challenges we face is that there is a lack of investment in the enforcement of local housing safety laws. And so the housing code enforcement staff is often chronically under-resourced. In some places like Georgia, in fact, their power is, or their authority to actually inspect homes is limited by state law. So in Georgia, it is unlawful for a community to inspect a property at all, or even have a rental registry without probable cause. So they can't go in and inspect unless there's someone there to invite them in. And so if the landlord doesn't do that, or tenants are afraid to reach out, then the property will simply just not be inspected. So looking at those kinds of laws and the resources that we provide these communities, and the role that federal government might have in terms of oversight when it supports investments by out-of-state investors, I think is really important.
I appreciate that. Thank you. Thank you, Mr. Chairman.
Thank you, Senator Van Hollen. Senator Smith from Minnesota is recognized from her office.
Thank you, Mr. Chair and Ranking Member Toomey, and thanks to all of our panelists today. So I start from the place that if you don't have a safe, decent, affordable place to live, nothing else in your life works. Not your job, not your education, not your health, nothing. And as Ms. Melinda said so well, when you lose your home, you lose more than just that. You lose your community. And that is why this hearing is so important. It seems to me, Mr. Chair, that our system is failing way too many people who are being victimized by these big corporate and institutional private equity landlords. And on Tuesday, as you said, we heard some stories about what this really means in the lives of people. I'm including Rachel, who's a single mother in North Minneapolis, who had to sign her lease as she was leaving an abusive relationship. And Rachel shared her own experience with this institutional landlord: flooded basement and with an unsafe electrical hazard in it, a garage torn down because it was unsafe, and other significant problems. And she told us how it was impossible, nearly impossible, to get anyone to pay attention to what she needed to have happen. Now, Rachel isn't alone. In the city of Minneapolis, we have found dozens of violations of city ordinances in homes owned by this large landlord. By one estimate, 58% of homes had code violations. In nearby Columbia Heights, the problems were so bad that the city revoked the landlord's rental license. Now, Rachel's rental is owned by a firm called Pretium, a large private equity fund, which acquired this portfolio last year. Pretium tells me that they are committed to fixing these problems, and they're going to do away with some of these onerous lease terms, and they need to meet their commitments to me. And I'm going to make sure that there is accountability here. But in the meantime, this speaks, of course, to a larger problem that we have in our nation. We are seeing increased corporate consolidation in a lot of sectors of our economy, in food, we're seeing that driving up food prices, heating prices, and now rent prices. And this is happening because these big out-of-state firms, out-of-town firms, driven by Wall Street expectations, are buying homes by the thousand, with the single-minded goal of driving up profits and turning these properties into cash cows. Now, I went to business school, and I know what cash cow means. It means that you maximize cash spin-off while you minimize investment and maintenance. And we know who wins and loses in this deal when it comes to tenants. So I want to ask a question around this topic to Mr. Waller and also to Ms. Martin. You have both been involved in the housing sector for a lot of years. Can you help us understand a little bit how these big institutional investors are turning these properties into cash cows and what impact that has on tenants? For example, what are you seeing in terms of the different experiences between tenants who are tenants of these big out-of-state cash cow investors versus local landlords? What are you seeing as some of the differences?
What I've seen in my work is that these landlords tend to not have a lot of empathy for tenants. So things will break in the house. Things will the basement will flood, for instance. The tenant will need a plumbing repair. It will not be done, or it will take months and months for the tenant to get relief. So again, this speaks to the need for code enforcement as being a critical tool in code prosecution. But again, it's very hard to find them. They typically employ local property managers that are very hard to pin down, and they hide behind the corporate veil, making it very, very difficult. But they do milk properties, as you stated. That is what is going on. They buy them for the lowest possible price. They try to put nothing into them and milk them for all the rent they can get.
And let me just ask, following up on this to Mr. Waller, so large institutional investors in housing, do you think that that has a downward trend on rents, or do you think it has an upward trend on rents? What's your
It's either.
What we've observed in Georgia is that these institutional landlords are well known for driving up rent, the cost of rent. In fact, year on and year on. But it's not just the rents. I also think it's important to note that there are fee schemes that are imposed that we haven't seen and we don't see with other types of landlords. These are very creative fees that can cost tenants a tremendous amount of money. There's one example: an Atlanta Legal Aid Society lawyer reported that her client had her lease payment was $1,300, I think, and $73 under the lease. But with the accumulated fees, it was $2,157 per month. That's a 60% increase. And so you can imagine what that does to tenants over time.
This is the kind of predatory behavior that I think is so damaging to a housing market that is already struggling because we have a shortage of supply, as we all acknowledge. So thank you, Mr. Chair, for this hearing, and I look forward to our continued work on this issue.
Thank you, Senator Smith. Senator Toomey has one question he wants to ask, and then I will turn it to Senator Warnock, remote. Senator Toomey.
Yeah, thanks, Mr. Chairman. Mr. Peter, in your written testimony, you speak about the extraordinary growth in the GSE's footprint in the multifamily market. You also state that many of the institutional landlords, including many that have been subject to criticism this morning, have actually been funded by the GSEs. So here's my question. Does the GSE's role in subsidizing multifamily loans really do much to increase affordable housing or even the supply of rental units?
Yes, Senator Toomey, it's a great question. And the answer is precious little. And the way it works, I've documented my written testimony on page 4. As you pointed out, there's been this massive increase in multifamily mortgage debt that's guaranteed by Fannie and Freddie. However, when an investor comes in, they find a property where renters are already making below 80% of AMI, area median income, and then the GSE require that the tenants in this building continue to earn incomes below 80% AMI. So due to the liberal GSE lending terms, the buyer and the investor is able to load the property with a lot of debt. And as long as the buyer can then make some renovations or not, and typically tends to then raise rents, but as long as the occupants are still generally earning incomes below 80% of area median income, Freddie then gets to tout that they are preserving success in maintaining affordable rental units, while the owner can brag about financial returns. So it's in the as long as there's, so this is, I think you need to follow the bouncing ball here, and so long as the system is all underwritten by Fannie and Freddie, I think we need to get the root causes of this problem. The root causes are really the financing, which is done by the government, which is then raising these rents on these low-income rental units, and I think that is something that we should have a close look at, because if it's underwritten by the government, it's creating all sorts of distortions in the marketplace, which should not happen.
Thank you, Mr. Peter. Senator Warnock is next, and then he will be followed by Senator Cortez Masto. Both are calling from their office. Senator Warnock from Georgia.
Thank you so very much, Chairman Brown. We are in the middle of a housing crisis, and this is true, obviously, all across the country, but it is especially true in Georgia. We're certainly feeling it all across my state, where constituents are facing difficulties finding affordable housing in the Atlanta area and all across the state. And in this time of difficulty, some corporate landlords have been aggressively issuing eviction notices. Between January and April of 2021, in the middle of a pandemic, Pretium Partners and its subsidiaries filed 155 evictions in DeKalb County alone. Ventron Management has filed for eviction against the tenants of Brooks Crossing Apartments a total of 427 times since April of 2020. I'm happy to see Mr. Waller here, a fellow Georgian who has been on the front lines of this problem and helping these families who are facing eviction. If you think about housing, you're talking about health care. Also, people are more likely to be able to maintain a healthcare regimen. Kids are better able to study. We're talking about education, a whole range of issues. Housing is stability. Housing is dignity. Mr. Waller, based on your experience working directly with communities, are these companies targeting evictions to specific areas, or is this just, part of the marketplace?
Thank you, Senator. It's a pleasure to see you. So yes, they are targeting. Their activity we observe is concentrated in communities of color and low-income communities. And as a result, although they might be a smaller, larger part of the marketplace, in those communities, the threat from this type of institutional landlord is very real. And it causes additional destabilization. Again, it extracts wealth from these communities, reduces their ability to improve their circumstances or find new places for their children to live. It also reduces the ability of the community to support the education of kids and support the employment potential of their families.
Well, and you described well the impact of all of this, but what's motivating these companies to file so many eviction notices during a public health crisis?
The eviction system in Georgia is set up to support the needs of landlords. And so when you look at why landlords use evictions, it's not necessarily to remove a tenant. Eviction in Georgia is a very inexpensive process for a landlord. It can be very quick. And landlords have attorneys that are at their disposal, of course, but also the way the courts are set up, it's very inexpensive to use a landlord attorney. And so they use eviction filings not just to push people out and bring new people in. They also use them to threaten, intimidate, and coerce tenants into paying paying often unlawful fees, as well as paying up rent when tenants complain about miserable living conditions. And I should point out that tenants have zero leverage in Georgia. Regardless of the conditions of the home, the tenant is still obligated to pay. And so if they don't pay, they can be evicted. And so landlords know this, and they use it to their advantage.
Right. And you've talked already about the effects of this on families. Can you talk a little bit more specifically about the impact of this on children?
Yes, sir. That's very near and dear to my heart, of course, at Georgia Appleseed, and the impact is really profound and can't be overstated. So, first of all, these evictions, and it threatens, the threat of eviction filings has a tremendous psychological effect on the parents and puts them in a sort of a state, feeling like they're in a state of constant emergency. So there's a lot of stress associated with that. But involuntary moves caused by eviction have measurable, well-studied, and negative impacts on children. There's learning loss every time there's a move. There are behavior challenges that appear after several moves. These impacts also affect their classmates. There's something called school mobility, which has been measured a great deal. And the more school mobility that a school experiences, in other words, the more children move in and out of the classroom during the year, the worse the effect on their classmates, as well as on teacher morale and teacher retention. So the communities end up paying the costs and not, when the landlords act in this way.
So all of us have reason to want to curb the activities of these bad actors. We all have something at stake here, whether it impacts us directly or not. Thinking about Dr. King said, whatever affects one directly affects all indirectly. And so I've introduced legislation to make down payments more affordable for first-generation home buyers. And I support affordable housing construction and transparency on restrictions for building new homes. But at the same time, we got to do something to address these bad actors, particularly in the middle of a pandemic. Thank you so much for everything.
Thank you, Senator Warnock. Senator Cortez Masto from Nevada is calling from our office.
Thank you. Thank you, Mr. Chairman. And thank you to the panelists. This is a great conversation and so appreciate you being here. Ms. Martin, let me start with you. In your written testimony, you noted that cities that want to take a proactive approach to code enforcement have a difficult time ensuring their compliance. So let me ask you, Ms. Martin and Mr. Waller, if you have any thoughts on strategies to improve municipal efforts and what we can do here at a federal level to support those local government efforts.
Thank you for asking the question. Code enforcement departments universally are stressed. It's very hard to find applicants. It's very hard to afford to have adequate staffing at the code enforcement level. And as you can see from the testimony today, it's imperative. It's the way we protect the life, health, and safety of these tenants. So any assistance that local governments could have to augment and support code enforcement as a function would be very helpful, for sure. And also, certainly anything we can do to help increase the transparency of these investors so they can be held accountable for their behavior.
Right. And so I'm curious if you have any thoughts, what we could do at a federal level. And this is I think many of us, our challenge is we understand a lot of this, the enforcement is at the local level where it should be, and there are challenges at the local level for municipalities and counties. Is there some thought at a federal level, what we can do at a federal level to support them?
Perhaps creating some sort of a regulatory environment where they have to be more transparent in their reporting of what they own and what the addresses are of the properties. They tend to be hidden in individual LLCs. We also find, many of them aren't paying their property taxes until, they're very delinquent. So milking properties. So anything where information and data can be collected and shared would be helpful.
And you touched on it. This to me is my biggest challenge right now is the data. There's a lack of it. There's a lack of accurate information. It is not easily transparent, I think, for many of us to even understand who the true property owners are. And And to me, I think that's the first step here moving forward. If we are even looking at federal legislation, is to capturing that data. And I don't know of anybody who really has accurate data. I'm still putting it together in the state of Nevada. And so how do we ensure that we have the most up-to-date information to really address the tenants' needs and address the issues and help our local municipalities? I'm curious, Mr. Waller, any thoughts on that?
Yes, Senator, thank you for the question. So I would underline Ms. Martin's testimony and also say that, there may be some basic corporate accountability measures that could be helpful. So requiring investors in this kind of situation to identify an ultimate owner, some kind that could be held accountable when there are violations of the law and costs pushed onto communities in this way. That would be really helpful. I think also thinking about housing code enforcement and housing safety enforcement as part of a necessary part of the tapestry of government supervision and encouragement of investment in affordable housing, and so perhaps even direct grants to housing code enforcement offices. I think the conditions are often forgotten. And historically, one way that we've had some idea of what was going on in homes and had some federal investment in improving the conditions of home was by funding voucher programs and funding local housing authorities so they could provide inspections of these properties. Because in a state like Georgia, that's the only regime in which there are inspections. Again, it's unlawful in Georgia for local communities to have, for example, an annual registry or inspection of rental properties. Thank you.
Thank you. Thank you. I appreciate that. One final question. At Tuesday's listening session, which was a great conversation, really so informative, there was a Nevadan there by the name of Kathleen Hernandez, and she discussed her horrible experience with renting a property with malfunctioning sewage pipes. And one thing she and other witnesses mentioned was being charged hundreds of dollars for service calls to address malfunctioning sewage pipes. And so, Ms. Martin, I guess my question to you is, what can local governments do to prevent these additional fees for basic landlord services? I mean, what else can we be doing to address this? Concerns that we see here with these fees adding up and really not achieving correction or a cure for the ultimate problem when they're called out.
I've seen many unconscionable leases that tenants have signed in their desperation to obtain housing. So one of the things that is an effort in Cuyahoga County is right to counsel, so that tenants have a right to legal help. Our Legal Aid Society is doing tremendous work locally, and there is some funding that has come through Cuyahoga County and also from the city of Cleveland that ensures that, but that is not widespread. And one of our agencies, and I'm sure this is true throughout the country, it was called the Cleveland Tenants organization. They were there to help with questions like that. Is this legal that they're putting all of this on me? So in some cases, I was seeing the landlord put the burden of paying property taxes onto the tenant, and things that just are simply in conflict with Ohio landlord tenant law, yet it was going on. So I think educating tenants and providing some means to fund organizations that do that would be very, very helpful.
Thank you. And I know, Ms. Melinda, I see you nodding your head. You would agree with that, I would assume.
Absolutely. And I think, the lease terms that I've seen from Greenbrook and Carlisle have just been awful. And having rented many, many apartments in New York City and elsewhere, I've just never seen these kinds of lease terms where they're really building in things like, if you have a pet, you forfeit your entire security deposit, even though I've already lived in my apartment and have a pet. And so they're just writing in all of these really ridiculous terms into the leases that a lot of folks are signing.
Thank you. Mr. Chairman, I know I went over my time. Thank you so much. Thank you to the panelists again.
Thanks, Senator Cortez Masto. Senator Warren from Massachusetts is recognized.
Thank you, Mr. Chairman. So last year, while families were struggling to make ends meet during a pandemic, vulture investors saw a big opportunity. Private equity firms and other Wall Street investors were busy scooping up homes in communities across the country, even in the middle of an historic housing shortage. So I recently wrote a letter to a few of the largest investors to get answers about their activities in the housing market. And they all told me not to worry. They gave similar defenses to what was going on. Part one, they told me that institutional investors play a relatively small role in the housing market. And part two, they said that by buying up homes to convert rentals, they were increasing the rental supply and making rental housing more accessible for those who prefer to rent. So I want to see if we can just explore those two defenses from the industry. Mr. Waller, I'd like to start with you. Institutional investors are telling us that they're just a small player in the housing market. You work closely with families across the state of Georgia. Is that what you're seeing on the ground?
The role of institutional investors is growing and growing quickly. So, if you look at some of the research that's available, just, I guess, in the third quarter of last year, I think they were responsible for about 40% of single-family home purchases in the Atlanta area.
40%?
And they're in the 5-county region, they were also responsible for, I think, 76% of the eviction filings in the end of last year.
Wow. So, thank you. We've reached the point where nationwide, more than 1 in every 4 single-family homes in America is purchased by investors. And that is a huge increase. And the vast majority of investor purchases, more than 75%, were made in cash, which is really hard for a family to compete with. So if investors are buying up more and more homes and new construction isn't keeping up, who gets the short end of the stick? And I think the answer is pretty clear. Families that dream of buying their first home. When investor home purchases skyrocketed last year, the share of purchases by first-time home buyers, most of whom can't compete with those all-cash offers, fell to its lowest level since the crash of 2008. So, Ms. Martin, let me ask you. You've spent 14 years leading South Euclid's housing department. Families are being priced out of home ownership across the country, forcing many of them to rent, even if they would have preferred to buy. Are big investors at least making it easier for families to access affordable rental housing the way that they claim they are?
Absolutely not. In my experience, that's not what's happening at all. I think what we're seeing on the ground is more scarcity. We're seeing more of a concentration of poverty as tenants are forced to find substandard housing in areas that they didn't want to live in because the opportunities in areas that they would like to live in are so scarce. These units are getting locked up and locked out of most of the people, who are seeking housing just don't have a shot at it.
Yeah. Well, thank you, Ms. Martin, and thank you, Mr. Waller. I appreciate your information on this. Institutional investors like to say that they are helping out renters and potential home buyers across the country. But that's just the story they want to tell while they just keep raking in the profits. With mountains of cash on hand and access to exclusive listing, these Wall Street firms are buying up already scarce homes from right under American families. And then they jack up rents and exacerbate the inflation that is straining family pocketbooks. So think about what this means. Big investors are blocking the main path that families have traditionally had to build wealth and financial security, that is, buy a home. They are also standing in the way of opportunities to narrow the racial home ownership gap and the racial wealth gap that are a blight on our country. So there's a lot we need to do to fix the housing crisis, but we should start with building more housing, just as Build Back Better would do. But we also need to loosen the grip that Wall Street investors have on our housing market. This would help level the playing field so that every family in America has an opportunity to pursue the dream of owning a home. Thank you, Mr. Chairman.
Senator Warren. Senator Ossoff from Georgia is recognized.
Thank you, Mr. Chairman, and I want to particularly welcome Mr. Waller from Georgia. Thanks for making the trip. Thanks for your testimony. Thanks for all the work you do in the community. Want to ask a question of you, Mr. Waller, and also like to hear from Mr. Peter on this. Why is it that institutional investors, private equity firms, are so much more liquid now, or have so much more capital at their disposal to allocate toward investments such as buying up housing stock? Or do you agree that's a fair characterization of shifts in market dynamics? Thank you. Why don't we begin with you, Mr. Waller?
At Georgia Appleseed, we're focused primarily on sort of the tenant experience and protecting the tenant. So I don't have the kind of research I think that Mr. Peter could provide. What I can say is that what we're seeing is that there is a lot of money available for these investments. But what we don't see when these investments are made are the construction of new properties or buying a property and investing in the property and upgrading the property, the kinds of things that you think about when you think about community investment. Instead, this is the purchase of a property, the extraction of as much money from it as possible, and then often, in the end, a derelict building when nothing else can be done. There are stories in the newspapers in the AJC or in Atlanta just yesterday about properties just like this that are essentially left to communities to pay for. So these investors come in, buy the properties, and then push those costs onto the community and onto the families living there.
Thank you, Mr. Peter. Your perspective, please.
Thank you, Senator. Yeah, so if you refer to the chart in page 4 of my written testimony, you see that multifamily mortgage debt outstanding has grown exponentially. And this is because of the federal government, particularly the GSEs, Fannie Mae and Freddie Mac. And so just in 2014, there were $400 billion outstanding. So now this is, by the most recent quarter that we have, Q3 2021, this has grown to $900 billion. And the reason why this is happening is because the GSEs are offering more liberal credit terms than the private sector, and hence they're able to crowd out the private sector from this business, and this is making it attractive for private equity firms to come into the market and take advantage of these liberal terms that they otherwise would not get from the private sector. So I think the solution, if you look at it, is to shrink the GSE footprint in this market, but also in the single-family side, if you want to solve this problem that you have identified.
Thanks for that input. And Mr. Waller, how does the tenant experience vary typically between a tenant occupying a home or an apartment owned by an institutional investor such as a private equity firm and a tenant who is in a home or apartment that's owned and run by someone in the community?
Thank you, Senator. So the way that I tend to think about this is, the farther that the landlord moves from the community and the family, the more the landlord sees the arrangement as a purely business arrangement. And so from the out-of-state institutional landlord's perspective, there are units that need to be filled, they're fungible, and there are customers that fill them. From the tenant's perspective, this is a home. It's very expensive to move into the home and acquire the home, and it's very expensive to leave. And so the farther apart those two eventually the owner is from the tenant and the owner is from the community, the worse it gets for the tenant. And so what we see is that the landlords that are out-of-state, institutional landlords, it's difficult to hold them accountable when there are problems. Tenant has no one to speak to. The community has no one to speak to, except perhaps a property management firm, which will come and go. They'll change often. And so as a result, they're subject to increasing and novel types of abuses that we haven't seen before.
Thank you, Mr. Waller. I want to come back to you, Mr. Peter, and reflect on some of the comments Mr. Waller made on the different approach that institutional investors will take toward property management. Their incentives are different. Much has been written about how over the last 50 years, the incentives in the financial services sector among institutional investors and fund managers have shifted toward short-term returns. That's how compensation is structured and rewarded. There's been a shift, many have argued, from a long-term approach to capital allocation to one focused only on the next month, the next quarter, maybe the next year. Do you agree with that? Do you think that dynamic prevails in our economy? Do you think that impacts how institutional investors might manage the housing stock that they're buying?
Yeah, I think ultimately it comes down to market power. And currently we have this massive shortage of housing and rental units that is making it easy for landlords, be they large investors, be they mom and pops, but also on the single family side to drive up home prices. And as long as it's being financed by the GSEs, these institutional investors are working within the system, which is allowing them, afforded by the GSEs, to take on more debt, load up profit of the system that the GSE provide. So I think you want to look at the role of the GSE and shrink those down. And I mean, it's all working within the system, because if you can raise rents, which is allowed by the terms that the GSEs come in, you increase the cap rate, which then allows you to extract even more equity, which is underwritten by the GSE. So it's kind of this circle.
Thank you, Mr. Peter. And finally, Mr. Waller, and feel free if you want to take some time on this and contemplate and get us something for the record. Don't want to put you on the spot. But if you have any suggestions for Congress as we consider housing policy, of what we can do to increase supply, right, to reduce barriers to increase supply and to incentivize investment in supply and growth of housing stock. We have shortages across the country, driving up rents, driving up prices. If you have anything you want to offer now, and then we'd also welcome anything for the record. That's my final question. Thank you.
Thank you, and we would be happy to offer something for the record later. But I can say that, thinking about the fact that there just simply are not enough homes for folks to move into. So I had mentioned April earlier, who simply cannot find another home in Albany, Georgia, where she can live with her mother who's in a wheelchair. There needs to be additional housing. The system we have now is not providing it. So I do think that there's a role for direct spending to state and local governments, mission-driven nonprofits, to invest in the development of affordable housing. I think that would be a big help. I also want to, again, underscore something that's been said a couple times: accountability and information. Local governments need information to make good policy. And right now we have very little information about how these landlords operate, who they are. And so measures to increase that would be very helpful.
Thank you, Mr. Waller.
Thank you, Senator Ossoff. The senator from Arizona has recognized Senator Sinema from her office.
Thank you, Mr. Chairman, and thank you to the witnesses for being here today. The rapidly changing costs in Arizona's housing market have been a major concern of mine for a number of years. Now more than ever, low-income and fixed housing Arizonans are struggling to afford housing. Recently, an out-of-state investor purchased an apartment building in Tucson that was originally affordable housing for seniors. But after purchasing the building, the investor doubled the rent for residents, forcing many of these seniors to seek increasingly difficult to find housing options. According to the Arizona Daily Star, Tucson's newspaper, the investor described his method as rehab: kick the tenants out and raise the rents. He describes the outcome he seeks as, quote, forced appreciation, where he tries to raise rents on Arizonans faster than market forces would normally permit. So let's think about that for a minute. Arizona has an affordable housing shortage and some of the fastest rising rents in the country, and somehow even that is not enough for this investor. So my first question is for all of the panelists, and I'd invite you to feel free to respond or not respond. Would anyone like to defend how this investor talks about Arizona seniors and, quote, kicking them out of their homes? Right. I didn't think so. So my next question is, does anyone testifying today feel like these actions and these words respect our seniors and the most vulnerable members of our communities? Good. We have common ground. Arizonans know we have an obligation to take care of and respect our seniors. Our seniors have worked hard, and they deserve to enjoy their golden years with dignity in the company of friends and loved ones. But many Arizona seniors live on fixed incomes and can't afford excessive rent increases. In Arizona, there's also affordable housing shortage for everyone, not just for seniors. So when out-of-state investors target Arizona seniors and kick them out of their homes, they aren't left with a lot of great options, and some don't have any options at all. So, Ms. Martin, I want to thank you for being here. In your city, have you seen instances where seniors being priced out of their existing homes by practices I just described in Tucson have contributed to homelessness among seniors?
Unfortunately, I have, Senator. The seniors in our community are some of the most vulnerable residents, and they have the most difficulty. And in fact, the example that I provided in my testimony of the woman who was evicted from her home, she was a subsidized tenant who had a housing choice voucher. She was a senior. Her sister was a senior who had dementia, and they were evicted from the home, even though they had never missed a rent payment. So I think, we need to take note of the impact this is having on seniors and on disabled residents, which is, in my experience, very commonplace.
I've heard from AARP Arizona, and affordable housing advocates about a disturbing rise in senior homelessness in Arizona. It's something I previously discussed in the Aging Committee and, of course, have talked about here in the Banking Committee. Now, Ms. Martin, losing your home, no matter who you are, is a life-altering event. But I believe that losing your home as a senior on a fixed income is uniquely challenging in this housing market. So my question is, do you agree? And if so, can you share a few reasons why it's uniquely challenging for seniors?
Typically, seniors are not employed, so they have no income other than what they're receiving in Social Security or small pensions. So they typically cannot afford market rate rents, and units in affordable buildings such as, low-income housing tax credit project building designed for seniors. In Cleveland, at least, there's a long waiting list, at least a year, maybe more. So in the example I provided in my testimony, the woman had put her sister with dementia in a house with another family member and her grandchild, and she was living in her car. And it's winter in Cleveland. So I think it's very real what's going on, and it's absolutely tragic. And no, they can't easily find other housing.
No, thank you. Mr. Chair, I want to thank you for holding this hearing today. I want to continue working with my colleagues in a bipartisan way to protect our seniors and to expand access to true affordable housing in Arizona and across the country. Thank you. I yield back.
Thank you, Senator Sinema. Senator Reed is recognized from Rhode Island.
Thank you, Mr. Chairman. We are in the midst of an affordable housing crisis that is exacerbated, in my view, by the behavior of these institutional investors. But one aspect of this affordable housing crisis is the lack of supply of homes. And Ms. Martin, how do local zoning rules and not in my backyard mentalities contribute to this phenomenon of limited housing or affordable housing?
I have seen that in my experience, especially with low-income housing tax credit projects. There typically can be a lack of understanding of what that would mean for a neighborhood, and sort of a not in my backyard mentality does come to bear with that. In Cleveland and Cuyahoga County, we're taking a very hard look at our zoning codes now. In fact, our First Suburbs Consortium has been working with our County Planning Commission to see if we can increase density and do things that would help allow for accessory dwelling units, for instance, where we can create more affordable housing opportunities. So that's a project that we are currently working on. So I agree with you that it is a true problem.
Thank you. And Mr. Waller, from your perspective, this issue of zoning reform or at least reevaluation, do you have any comments?
It's a conversation that's also going on in Georgia, particularly in the larger urban areas, where part of the reason for affordable housing, the lack of affordable housing, is the property to build it on. The conversation is going on, and we can provide more information about that afterwards. In the rural areas, that's not as much of an issue, of course.
Mm-hmm. Thank you. This question sort of it's in the purview of the Finance Committee, but I'm curious from, particularly Mr. Waller, from your experience, are there unique tax advantages to these institutional investors that give them even more incentive to buy property and to operate the way they do?
I'd be happy to provide more information about that after the hearing. I will say that it does seem strange that there must be lots of different types of incentives, because this is not a type of investment that we were seeing a lot of in the recent past. So the idea that you would borrow a lot of money or invest a lot of money in an older building with low-income tenants paying low rent, and that would be seen as a lucrative investment seems strange to me. And so I'm sure there are some issues there that we could provide more information for you.
Right. And it was, I think, listening to your comments to Senator Warren about the eviction rate seems to be a business plan, not just a coincidence. Is that your view?
That's exactly what we're seeing. And the institutional landlords are better positioned than other types of landlords to take advantage of the eviction system and to it's very, like I said, it's very inexpensive and easy in Georgia, particularly if you have lots of properties where you can run all of your evictions through a single attorney. So the way that these court hearings go is that the landlord attorney will sit at the front of the court at plaintiff's table, and all of the tenants, hundreds of them, will sit behind that attorney, and that attorney will handle many, if not all, of those cases some days. And so it's very efficient, very quick, very cheap for these institutional landlords.
Well, thank you. Again, this is an area where we have to look much more closely in terms of the behavior of these institutional investors. And I share some of the sentiments, obviously, of Senator Sinema, that the beneficiaries of this are far away. The people who bear the burden are many times seniors, poor Americans, et cetera. That's one factor. And then the other factor, as we discussed, we have to get much more housing built that's affordable and accessible also to all of our Americans. So thank you very much. Keep up the good work, ladies and gentlemen. Thank you.
Thanks, Senator Reed. Thank you all for testifying today. It's obvious from our hearings from reporting by journalists in our communities from the firsthand testimony of renters earlier this week and today that private investors and landlords exploit our housing shortage and the lack of renter protections to exact greater and greater profits for themselves. They often do it while hiding behind opaque LLCs and ownership structures. They add fee after fee. As our Georgia representative pointed out, they ignore maintenance, they exploit loopholes and tenant protections, they drive out longtime tenants. They think they can make a bigger buck from somewhere else. I was particularly taken by our witness from Bedford-Stuyvesant, where she had owned a dog all this time, and then they can write into the new contract with a new purchaser penalties for that. We heard the same tired arguments we always hear from corporate defenders: let the market sort it out. If people actually listen to the words of renters from this week from Minnesota and Nevada and Montana, you would know the market is not, in fact, sorting it out. We also heard a lot about inflation today. If we're serious about bringing down inflation, not just using it as a political talking point, we must bring down housing costs. It's the biggest item in most families' budgets. Prices have been going up for years. We have a plan to reduce housing costs for more families by increasing the supply of safe, decent housing. It would also help state and local governments remove barriers in places like South Euclid and Cleveland to increasing the supply of housing, something we've heard bipartisan support from witnesses over several hearings. And if my colleagues really want to bring down housing prices, I hope they'll join us to get that legislation passed. I look forward to working with colleagues to help increase access to safe, affordable housing through these policies. I thank the witnesses again. Senators who wish to submit questions, for the record, those questions are due 1 week from today, Thursday, February 17th, to the witnesses. You then have 45 days to respond to any questions. Thank you again for that. With that, the hearing is adjourned. Thank you.